Your business might be missing out on big tax savings. Let's uncover what everyone's talking about. Your creative genius deserves the same precision behind the numbers.
Welcome to Let's Get Fiscal, hosted by Anastasia, Myiesha, and Danielle.
Part of the women-led team at Coterie Tax.
From smart tax moves to cash flow strategy, we decode everything it takes to run a thriving, creative business
so you can scale with confidence and sleep easy at night.
Press play and let's grow your business.
Welcome to the first episode of Let's Get Fiscal, and I am here with Myiesha and Danielle. I am Anastasia. I'm an enrolled agent and a CPA, and I just love to talk tax. So our first episode, we are going to talk about what I say the S Corp FOMO. So we get a lot of questions about an S corporation. I think it's like a really big, just like
hot topic.
Right. Yeah. Especially on social media, everybody wants to talk about that. But I'm sure when you're on set, you have a lot of friends that also have an S corporation. So it's hard to really know what that actually entails.
Or who needs one.
Right.
Mm-hmm. Right.
Yep. So I always say an S corporation is a little bit like a baby. So you have to take care of it all throughout the year. It has certain responsibilities that are attached to it. So knowing whether it's right for you and whether it's the right time, because adding extra responsibilities to your life when you're already trying to run a business, so
yeah, there's a lot.
It's pretty overwhelming really fast. And I like to really also break it down so you understand why some of these different things are happening. So, yep. I mean, I guess, what are some of the questions that people come to you, Myiesha, with?
So the main questions we got at our most recent trade show, I felt like was most people not knowing when to make the leap into the S Corp of like they've had their single member LLC, they like have been doing that for a little bit and they just don't know when do they like what things precursor to moving over to the S Corp or like if that works for them. So that was the lot where I was like, yeah, you can talk to Anna about that and figure that out. So yeah, so tell us, how do you know?
Right. And that's another one of the areas where taxes can be very frustratingly gray because there isn't really one right answer in that situation. And it's super tailored to you and your business and what your goals are with that business as well. So normally we want to pay attention to reasonable compensation, but when you get to over six figures as a single member LLC, you really should start considering taking the business to the next step.
Well, what does S Corp stand for?
Just a subchapter S. So the S is a portion of the IRS tax code that actually creates and lists some of the requirements for the S corporation. So what's also really fun is a lot of people ask, okay, well, I have an LLC. Do I have another business that's the S corporation? And I always say an LLC is a bit like a Frankenstein of business entities. So one of the important differentiations to recognize is that S corporations are determined on the IRS and federal level. An LLC and a corporation, those are determined by the specific state that you are operating in. So it's kind of like being somebody's sister, but you're also someone else's cousin, but you're the exact same person. Each entity is going to call you something different. So an S corporation could be either an LLC or a corporation on the state level, but the IRS is going to be treating it a little bit differently from their end. So I know that gets a little bit confusing.
Yeah, you're losing me here. Okay. Hold on. So I have a business, and if I make over six figures, I should consider turning my LLC into a S Corp.
Yes, but even more importantly, you should consider being really intentional with your tax strategy, reaching out to a tax professional. And
of course,
because there's some things that can be done without going to that next level, but it's definitely the time where you have to say, okay, is this a real thing that I'm going to continue doing throughout my life? And or, is this just a one-time thing that, I want to have a W-2 job? So it's really the moment where you have to kind of consider, what is that roadmap for me over the next 2 to 3 years? And then from there, we start talking about whether or not the S corporation is actually the right structure for you. So when you're a single member LLC or even a sole proprietorship, you have to pay Social Security and Medicare. And a lot of that happens when you're a W-2 employee. It just happens automatically, so you don't think about it.
Right.
So that's where a lot of people get that surprise tax bill, not necessarily because of the income taxes, because they could be paying 10%. I've seen people that pay $2,000 in income taxes, but they have $10,000 in Social Security and Medicare. So that really jumps things super significantly. And part of what the S corporation does is it allows you to limit the Social Security and Medicare to your reasonable compensation. So in a single member LLC, if you are working and you have profit of maybe $20,000, then you'll pay Social Security and Medicare on that $20,000. But under an S corporation structure, your salary would still probably be $20,000, because on average in the United States, people are making $50,000. You also have to look at what is your end profit. And for different creatives, that might be different. So a videographer, a lot of their expenses and how they run their business is themselves. So it doesn't really cost anything, versus someone who is working with a physical medium where they have to purchase the items, like someone who does pottery. That's going to have a lot more costs associated with it. So there's more likelihood that it'll take longer to get to that S corporation structure versus, like I said, like a writer or photographer, videographer. Their main source of income is going to be them.
Right.
And so they're going to reach that S corporation structure a lot quicker.
Right. Okay.
So some of the things, again, reasonable compensation. Okay, what even is that? And it gets a little bit tricky because you think, okay, if I went and I worked a W-2 position, my friend is offering me a certain salary. In that W-2 position, I say you are only working on your core competency. So that is actually the value and the service that you're providing to your end clients. That's your only focus.
Right.
But when you're running a business, you're also going to be the marketing person. You're going to be writing all the invoices. Sometimes you're doing bookkeeping. If you're running a photography studio, maybe you're also the janitor. Different things come into play. So you have to recognize that you are performing multiple jobs. So what is the rate for each of those jobs, and how much time are you allocating to all of them? So that's where reasonable compensation kind of gets a little bit murky for some people. So
I just understood. It all just clicked with the S Corp to me just when you said that, reasonable compensation. Okay, so I understand now why a videographer would be all of those people and be his own corporation, as opposed to someone with pottery who would have more supplies and more, who would hire someone to do those things and maybe have more contractors who might be more beneficial as an LLC.
Right. Because it all comes down to that bottom line. Because if you say my reasonable compensation, if I, just to keep it easy and not to split things up into a million different positions, but if you are a videographer, you make $100,000 a year, but you do that half of your time, that's $50,000. And then the rest of your time, you're the receptionist, bookkeeper, and all of that. And that is $20,000 a year. Well, now you take your $50,000 plus half of the 20, and you're at a salary of $60,000 instead of that huge salary of $100,000.
Right.
So when we're looking at the S corporation and the single member LLC, we already know you're going to pay Social Security and Medicare on the $60,000 no matter what. So if your single member LLC is only making $30,000, the S corporation structure isn't going to help you because it's not going to change the fact that you're going to pay Social Security and Medicare until your business makes the $60,000. Then once you're over that hump, that's when the S corporation caps your Social Security and Medicare, and then you only have to worry about your income taxes from that point on.
Okay.
So, I mean, how to even find that information?
Yeah. I mean, that's why they hit us up, right?
Right.
To be like, okay, let's figure this out together.
Right. I rely on a program. It looks at your state, your county. It has all of the different job descriptions and really identifies the responsibilities that you are required to perform in each of those roles. And then it also looks at, are you even good at it? Because a lot of compensation.
Is it going to be worth it?
Yeah. Well, not necessarily, but a lot of compensation is based on your proficiency at something.
Okay.
So if you are this incredible janitor, people are going to pay you a premium price versus if you just kind of like have no idea what you're doing there. So we really break out not only where you are specifically in the country, but also the specific roles. You have a job responsibilities listed out for all of those roles, and then also your proficiency in those roles. And from there, we're able to determine what is that actual reasonable compensation. And so even sometimes that is a lot of work.
Right.
Do you make clients do like a self-evaluation of like what they, where they like rate themselves of like, I'm so with the bookkeeping.
Right.
Okay, fun.
Yep. So, and I mean, sometimes I'm like, maybe you're.
Let's bring that down a couple percentages. Yeah.
Awesome.
So I even say it can be done just kind of on your own because we have access to things like Indeed and other job posting platforms that can kind of tell you what the average rate is in your area for all of these positions. And you really want to think about, okay, what am I doing today that maybe I could hire somebody to do later on? And so that's why I say things like bookkeeping, being a receptionist, answering the mail, all of that stuff is something that a business requires. But when you're a small business, maybe that's only an hour or two a week.
Right.
So it doesn't really make sense to bring another person into all of that chaos because you're going to spend more time explaining it to them than it would if you just did the job, you know. And then eventually you'll scale to a position where you will need to fill that role with either a part-time or a full-time employee. So you can go online, I say get 3 separate references so that you can really back up the reason why you chose that rate. And even for yourself, like I said, if you're a videographer, you can determine a reasonable, and that's why reasonable always comes into play because it's not necessarily set in stone. Someone who is working in Arkansas is going to probably make different money than if they're working in New York City.
Yeah.
So, but you want to be able to make sure that it is a livable wage. Sometimes I see people that they pay themselves $20,000 in payroll, but then they're taking $150,000 out of the company. And so I'm like, okay, obviously that's not going to be
right.
And even the IRS at certain points says, okay, how is this person surviving?
Yeah,
You know?
yeah.
Okay.
If they're, like I said, generally people are looking for $50,000 a year. And even that nowadays is not a livable wage.
Yeah.
So if you are creating a business and you are working for yourself, but you're consistently not making any money, the IRS just at a certain point says like, well, just stop doing that. Just stop it. So that's why it is a little bit of a balance.
Yeah.
And then there's also other ways that a business owner can withdraw funds from the company. And that's where a lot of that tax strategy and some of the other questions come into play. So, like I said, an S corporation, it is going to have additional responsibilities. So not only do you have to figure out your reasonable compensation, you have to put yourself on payroll, you have to have financials because you have to have a balance sheet. And that's the biggest difference is when you're a sole proprietor or a single member LLC, you can just tell them the income and your expenses and you're basically done. But once you move over to the S corporation structure, it is a corporation of a type. So you want to make sure that it has all of the regular financials that a standalone business would have. And then you also have all of the compliance on the city and the state level. So
super fun.
What your accountant probably will do for you.
No, not necessarily.
Sometimes.
Yeah. It's like a whole sector all by itself. Yeah.
Right.
Yeah. No, there's a lot when there's like a new client that comes on and it's like a random city. You go, okay, well, let's go see what this city like requires. You have to like kind of dig it in and go to the like city site and everything like that just to see like, do you require us to file every year for something?
Right.
Like,
Right. A home occupation license.
Yeah. That's always super fun.
Okay.
They're like, I work at home and it's just like, you still gotta get a license for this. So
really?
Yeah.
Okay.
Well, because they want to protect the neighborhoods from, like people running a Kmart out of their house.
Right.
I don't know if Kmart just aged me, but
a little bit because I don't think they exist anymore.
No, I don't think they
I'm pretty
do.
sure they're gone.
But that's a lot of it. Or certain cities have their own taxes. Colorado is a home rule state, so every single city has their own rules.
Okay.
You want to make sure that you're just on the right side of all of those rules so that you avoid any of those scary letters.
Yep.
I mean, I would say a lot of the jurisdictions are really super helpful, but you know, it's scary, so a lot of people try to avoid it. But
if you file your S Corp in Arizona and you move to Colorado, do you have to file it in Colorado also?
Kind of, yes.
Okay.
So it's more about the business itself and where it's operating.
Oh, okay.
So even if you didn't move to Colorado, but you are there for multiple months out of the year, you have an office there, you're advertising there, Colorado would consider you as doing business in their state.
Okay. So you're paying taxes to them.
Right, right. They want you to pay taxes to them. And then we call it a foreign entity. So you're not really creating a second business. You are just adding that to the list of places where you are working. So it's always going to be the same entity. And even if you're moving, you can close the business in one state and then open it in the other state, and it's the same entity. You don't have to get a new EIN or file for the S Corp status again. It can still be that same business at its heart, but just in a new location.
Okay.
Does that kind of like bring it back to like the differences between like federal level and state level of like who considers what? And so, when you're moving from station, that makes sense. Yeah.
Okay.
Right. Because the IRS is, you're working everywhere. We're going to get it no matter what. So, yeah.
What if I'm ready to make the leap to S Corp? Where do I find that? Where do I go?
I mean, they come to us.
Yeah.
You come hang out with us. We're pretty cool. Yeah.
I'm there already with you. Where did they go?
And that's where a lot of it is talking with a tax professional. And again, making sure that that strategy actually works for you and
like it makes sense.
Your goal. Because a lot of times with taxes, you need to be super intentional, because if you're not deciding how much you're paying in taxes, the IRS will decide for you, and they are going to choose a bigger number. So if you're ready for an S corporation or you're really heavily considering it, it's good to talk with a tax professional that deals with S corporations on a daily basis, because there are some tax professionals that refuse to work with S corporations, or maybe they don't deal with them as much. So you need to find someone that is specialized, that's able to show you the plan so that you can see what are the benefits and what are the cost savings, but also what are the additional responsibilities and what are the costs associated with it as well. And I normally say that's really good to do in the very beginning, because an S corporation, you're basically paying money all throughout the year, because under a single member LLC or a sole proprietorship, everyone's worried about April 15th.
Yeah.
And we move the date forward into December, because everything needs to happen in that calendar year. So you can feel like, oh, okay, so I have to pay extra for the tax return. I have to have a second tax return. I have to have bookkeeping every single quarter. I have to have all of these things. I have to run payroll every single month. And it just feels like you're paying out a lot of cash, because you don't get that one bill in April that surprises you. You know? So being able to really see what that difference looks like for you kind of brings it into perspective. And okay, it makes sense. And even if I'm not saving up for this one event that happens one time a year, and instead it's little pieces all throughout the year, it still makes sense, and it's still the right thing for my business. And overall, it's going to get me to the position that I really want.
Makes sense.
I like it. All right.
So to like circle back to answer the questions we got at the trade show, basically they should talk to someone, and like preferably us, but like talk to someone to, kind of like really dig into it. Cause I know like when we have like a new person come on, like we look at their prior year tax return, and like what other things would you want to look at besides like asking them their goals and stuff to like kind of do your compare analysis and stuff.
Right. I mean, and some of it depends on also their lifestyle and who they are as a person.
Yeah.
So if you have someone who is you can have two videographers, but if one is traveling a lot and one isn't, or one person does documentaries that are in the Amazon, they're going to have different levels of expenses. So even though you can be in the same industry, two people have different focuses, different expenses, different values. So you really have to think about what is their lifestyle like, what is really important to them, and then kind of build from there.
That makes sense. Yeah.
So,
Okay.
But definitely once you get over that 6 figures mark, that's when you should start considering it. Below the 6 figures, there's normally other tax strategies that can be done to get you to the same exact place, but again, without having all of this extra responsibility and extra cost.
Right.
So I'm pretty big on a small business needs the cash flow in order to survive. And that's the reason for a good tax strategy and for looking at your financials and bookkeeping. Right. So it just makes sense that if we can do the same, get to the same spot cheaper, then let's just do that.
Yeah. No, that's fair.
And I always tease, accountants are super busy. So if we have less work to do, that is great.
We're happy.
One less tax return. Thank you. That's why I love when people get married. So
I like it when they get married. It's when they don't tell us that they get married sometimes that we find out after like everything's done, or like we had a client that just like had a child and didn't tell us that they had a child until like everything was like fully, I think, like done. They're like, oh yeah, by the way, we like, we had a kid like 6 months ago, and we're like, oh, okay. Yeah.
Great.
So, tell us things.
Yeah.
We can remember everybody. It's
and
always
that's
fun.
Where a good tax strategy includes all of those items because different people living different lives, different lifestyles, they're going to have different needs. And a business should provide you with the life that you want.
Yeah.
And that's the reason why you're doing that. So a tax strategy that's for one person who's hyper-focused on retirement might not be the right one for you if you want to go into investing into properties and things like that. There's a whole bunch of different options. And that's why the S corporation conversation gets so convoluted. and people just aren't really sure where to go because their friend might have one, but it really depends on
like you as a person in your business and what you do. Yeah.
And even sometimes, I mean, I have people that just say, you know what, I do not have the headspace for any of this. I don't know. And that's always fine too.
What if you have employees in your business?
So you can have employees for a single member LLC or an S corporation, but it does make that barrier to entry a little bit lower because you're already paying for a payroll system. It's not an additional cost. It's kind of what you're required to pay anyways. And again, that plays into the decision on whether or not you should make the switch. And then even sometimes in the real estate industry, a lot of the brokers, if you do want to have a company, it has to be a corporation. You know, there's certain industries that are very restrictive on how they will operate with a freelance business owner. So that can also play a role into it as well, because the S corporation allows you to withdraw funds a little bit easier than a C corporation. So if you're required to have a corporation on the state level, sometimes it would behoove you to change it over to an S corporation immediately.
Yeah.
Because staying a C corporation, you do have that double taxation. And again, there's always ways and reasons why that might be tax savings. But for most of the time, when the business is you and that is your baby and that's what you're going to be doing for the rest of your life, those are situations where it makes sense to have it be an S corporation. So there are situations where maybe you make the switch a little bit earlier, but it's because you wouldn't be eligible for the jobs if you didn't have that. So
yeah,
it's definitely a big balancing act, but I think the big thing that I have to tell people is that your LLC is your S corporation. So again, like that Frankenstein entity, an LLC can be literally taxed as anything. So it can be taxed like a sole proprietor. It can be taxed like an S corporation. It can be taxed like a partnership. It can be taxed like a C corporation. So you have a lot of leeway there, but it makes it harder because everything in taxes, there's never really one right answer. Another key thing to think about in an S corporation is if there's multiple people in the business. So that's really, really big. So in an S corporation, there should only be one type of stock. So and that's kind of
like
how,
a partner, you mean?
A little bit. So it's kind of like in a C corporation, you get stock and that carries forward over to an S corporation, but there's only one type of shareholder. So everyone has to be treated exactly the same. So if you have a relationship with a partner where you say, okay, if you do this, then you get 30%. And if I do this, then I get 40%. And it's a little bit convoluted, then that's a situation where maybe the business entity stays as a partnership so that you have the ability to treat everybody a little bit differently and without invalidating your S corporation status. So again, like that's another spot where you say, okay, maybe a partnership, it might not be in its best interest to convert it over to an S corporation, depending on what's going on. I
didn't understand that part.
Right. And it's just because any type of business basically could be an S corporation.
Okay. Okay. Say that whole part again. I was distracted by something.
So any type of business could be converted into an S corporation.
Okay.
So a single member LLC, it could be converted. A partnership or a C corporation could be converted into that S corporation structure.
Okay.
And then it's just deciding based on the overall goals, who's involved with the company, what the future is for the company, whether or not it makes sense to actually make that additional election to convert it over into an S corporation.
Okay.
And don't have more than one. So, I see a lot of people that will be, okay, I have this project, maybe I want to do marketing over here and I want to focus on photography over there. So I'm going to have both of them as an S corporation. And what that does is it duplicates your reasonable compensation because you have a requirement to each company for that reasonable compensation. So when you talk about a tax strategy, you also have to look at the structure and the ownership of the companies and how they're going to be interrelated so that you can make the best decision. Yeah. But ultimately, in a lot of cases, it doesn't benefit you to have more than one S corporation.
Okay. Unless they're both making a lot of money.
No. That would be a bad thing.
Oh, really?
Right.
Oh, okay.
Right. Unless you have to, sometimes there's situations where you're joining an S corporation and it's already there. But for the most part, you should have your core S corporation. That is you. That's your baby. You would never sell that entity at all. And then you decide how that S corporation is going to interact with all of the businesses underneath it, whether it's going to own it, whether it's going to receive a management fee from them, what have you. So there's other ways that you can take money from one business and put it into that S corporation.
Okay, I understand.
But if you have more than one, like I said, then you have to look at what are your responsibilities and your job positions for each one, and you're most likely going to duplicate your requirement for reasonable compensation and end up negating the whole reason why you got an S Corp in the first place to decrease your Social Security and Medicare.
So you can have multiple businesses, but don't make them all S Corps.
Right.
I know there's a lot of things online where you don't even necessarily need a tax professional anymore to create an S corporation. And it really is just a piece of paper. So as AI progresses, it's going to be more accessible for people to create businesses, convert them over to an S corporation, and receive just some general information. But it's going to be more and more important to reach out to someone who is highly specialized in the area to make sure that it's right for you and your business in the long run.
Yeah, what AI won't tell them, though, is their tax information. So that's why you'll need a tax professional.
Right.
Or just because it's general. So like it's this whole combo.
They can show them the paper.
The shoe size doesn't fit for everything, so you have to make sure it fits. So if it's AI, it's going to be a lot more generalized, it seems, and not necessarily about you as your person in your company.
Yeah, that's true.
Yeah.
Yeah. And like you said, a lot of it too is forward thinking and making sure that the person understands what you are working towards.
Yeah.
And sometimes that can be difficult in AI just because the way that AI works is it'll only remember a certain portion. So it's hard to, right. It's hard to describe a whole entire lifetime and all of your hopes and dreams in a certain number of characters. So it'll start to get better and better, but it's always good to sit down with someone and really walk through what those differences are. So
awesome.
I guess, like everything in taxes, I guess the answer on whether or not you should create an S corporation is maybe. But really, a lot of it, if you take anything away from it, make sure you run payroll. Before you take out any money from the company, make sure you're paying yourself. Figure out a reasonable compensation, and then you'll be on the right side of the IRS, and we will love you because you're already halfway there.
Yeah. So. A lot of less setup for us. Yeah.
Yep. So that is a little bit of a deep dive into S corporations, and I hope you got a lot of information, maybe have a lot more questions. I always say you can't ask questions if you don't even know what conversation you're having. So if you have any additional questions, feel free, put them in the comments below, and make sure to like and subscribe. That's a wrap on Let's Get Fiscal.
Ready to stop guessing and start saving?
Click the link in the show notes.
Grab your consult and let's make your business work for you,
Not the other way around. You've got this.